Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
It is a full house today.
It's a full house. Stephen's
Rushforth
here.
is
Yeah.
here. Stephen's here?
I was going to say Stephen's here, you know.
Are you mad at him again?
Yeah, what's with
No,
the
I'm
Stephen?
not.
The show just started.
No, I'm not mad yet.
That didn't take long.
Yeah. Well, keep in mind we've been here for 45 minutes together, so yes,
Yeah.
I am mad at him.
And he's
In a
got
row.
some inaccurate real estate numbers that he was.
Yes, I did all my
trying to
research
tell-
this morning, and
trying
it
to tell
turns
the real
out it
estate
was
agent.
May as opposed to June numbers.
Well, you made me question myself because you were throwing around some numbers that I was like, I'm about to talk about numbers on the air.
Where'd you get yours? Well, same place you got yours.
And I was like, yours numbers are wrong. And I was like, someone's wrong. And of course, as normal, it's not Frank this time, but it's you that's wrong.
Would you like to introduce your counterpart?
Of course, Sean Reid's in the house. Of Advanced Mortgage Investment Corp. and part of the Mortgage Brokers Ottawa family. So, sister company, brother company. I don't know. Which
I don't
one
know.
Is which,
I don't know which the appropriate one now to
Mother?
say, but mother
Well,
company?
you know what? With your pink shirt on, we'll call it the sister
It's
company.
not
How's
that
that?
pink shirt. It's not
mauve.
bad at all. But
It's mauve, yes.
I'm thankful for the invite today. I knew it was a sunny day in July, and so we had to do something to boost the ratings today. I'm sure.
Did
right?
you invite Sean, Paul?
I did not, but what he did say when he came in, I heard the ratings are down, so I'm here to pick them up, is exactly what he said.
I listened to last week's show.
Yeah, or the other 903 shows.
All right, what numbers you got for us? Good news or bad news?
It's very good news, actually. And, I've been preaching that it's a very decent market for buyers and it's a very decent market for sellers. And a lot of people will say, well, how could it be good for both? And when I tell you the numbers, you're going to realize why it is really good for both. Before I do that, though, I'm going to put my glasses on, okay?
Okay.
Oh, again?
All right. Yes, I got to put my glasses on. But we saw June very robust, and May was great. We saw Jan, Feb, March, April decent. May was really good. June was actually really good. Number of sales was up 10.6%. But new listings are up, active listings were up, and the average sale price was up 5.2%.
Wow.
So when we look at year to date, the number of sales is up 2.1%. Our new listings were up 7.1%. Our active listings were up 13.5%, and our prices were up 3%. So what it's showing us right now is for buyers, we have more listings on the market, more active listings on the market, and we know what the rates are doing. So it's very attractive for buyers right now because of what's on the market. So someone will say, well, then as a seller, it must suck for sellers then. Well, we just showed you that the sales are up and the prices are up. In fact, at the end of January, our average sale price here in Ottawa was $670,000. We've just eclipsed 700. We're at 704. So if you as a seller don't think it's a good market for you, you're mistaken. So great market for buyers with all the inventory and where the rates are. It's a solid market for buyers. You have a lot more selection, a lot more choice, a lot more inventory. Solid market for buyers.
So I just got.
But for sellers, your prices are actually going up. The number of sales are going up, so things are selling. But it's just a very finicky market for sellers when it comes to condition of home, pricing of home. Like I've been saying for the last 6 months, has to be priced well and has to show well. So this is probably our first market in probably pre-COVID where I could say, what a great market for buyers. What a great market for sellers.
How often does this happen?
Doesn't happen a lot. I mean, we usually have usually teeters to either a seller's market or a buyer's market. Very rarely are we in a balanced market where it's great for both. But when you see homes hitting the market with a flurry, homes selling on the market, and prices going up, I'm saying to buyers, listen, we're seeing prices go up. You may want to get in sooner than later. There's lots of choice out there. It's not as if you're starved for inventory. Let's get in the market sooner than later. And then sellers who are like, well, I'm just going to wait. Well, listen, there's tons of buyers on the market. Why would you wait? Homes are selling. We've seen the number of sales are up. The prices are up. What a great time to sell your property.
Did you say prices are up 3 or 5%?
Prices were up 3% year to date,
Which is pretty good for Ottawa.
which is great for Ottawa. I mean, anytime you're in anywhere from a 2 to 4%, you're in a very, very solid, balanced market. And we're at 3% right now. We'll probably end anywhere between, 3 and 4, maybe 3.5%, somewhere in that range for average sale price up, which is a great market, especially when our average sale price is $704,000 right now.
Wow.
Hey, Paul, would you agree that it's very neighborhood dependent, though? So the numbers could be statistically higher because maybe some more popular neighborhoods with higher end homes are selling, where maybe some of the other ones that have more listings may not be selling. Because I've got a few clients that have been struggling to sell their property, and they've had lots of showings, but for some reason there's a lot of competition in that neighborhood, and therefore, their house may not be the best one there, and they're losing out on probably a lot of offers.
100%. I mean, neighborhood dependent, like I've said before, if you're in a new suburbia that has lots of new home tract builders, there's lots of competition in those areas. However, that's where most people are looking. So there's a lot of buyers, but lots of competition. Homes that are selling usually over asking and are a little bit more sought after are more the older areas that don't have a lot of the new home tract builders in there right now, but they don't have as many people coming to that area. So we're seeing certain areas in the city, certain pockets. We're still seeing the west and the south is probably the hottest areas, and they have been for years. But yeah, there's certain pockets that people are like, well, you say on the radio, the market's great. My house is not selling. Okay, well, what area are you in? Some areas are struggling right now. Other areas, and just like at every time of the year, we have some areas that are in a buyer's market. Some areas are in a balanced market. And then we have some areas in a seller's market. It all depends on where you are. So when we're going to price properties, we have to do a macro approach, but also a micro approach. Like we have to see what's going on in the market, what are the hot segments, what's the hot products, but also what's happening in your direct little area. And it's not like, if I'm looking at Canada, I'm not looking at the whole of Canada. Are you in Canada Lakes? Are you in Kitimavik? Where are you? Because certain areas are transacting different than other areas.
So older areas better, you think?
I'm not saying it's better. Right now, a lot of times those older areas have less competition on the market, less people looking, but there's less competition on the market. So sometimes you might be able to cheat a little bit on price in some of those older areas. We're seeing in suburbia sometimes where there's lots of tract builders. You might have, let's say you're looking at a townhouse in Riverside South. You might have 15 on the market. Well, that's not including the 3 builders that are in the area that are selling that product as well. So you're in competition with the new home builders. You're in competition with the 15 others on the market. So there's lots of competition. But saying that, affordability-wise, lots of families are moving to those areas. So you do have a lot of people looking in those areas, which is absorbing a lot of those homes as well.
If you're in competition with new builders, it better show well.
Well, of course. I mean, a new home builder. But keep in mind, if you're in competition with a new home builder, you have the eaves troughs, the curtains, the appliances, the air conditioning, all those things. But you're also a product that if you're 5, 6, 10 years old and you're a little scratched up and a little bruised, yeah, you're going against these new home builders.
Yeah, if you're going to go walk through a model home and then go look at a different townhome that's 5 or 10 years old, it better show well.
But this is where you have to have the experience of a really good realtor, because lots of builders have different products. You might look through a show home that looks like done to the nines, but the builder really uses the cheapest carpet, the cheapest laminate, the cheapest this, the cheapest that. So you better know who you're buying, what builder you're buying, because sometimes upgrades can be absorbed very, very quick.
Frank, your favorite number came out this week. Jobs report in the States.
Mm-hmm. Isn't it interesting how the government is responsible for most? Now, it's not the federal government this time around. It's the states themselves that are hiring more public servants. But on the private sector, not so good.
So they say unemployment fell to 4.1, and now what? They'll revisit this in a couple of weeks and say we were off?
They don't revisit the unemployment. What they revisit is the number of jobs that are reported. So they revisit it 2 more times after the initial one. And generally speaking, it comes down by anywhere between 10 and 30%.
So they say they created 147,000 jobs.
Yeah. So the likelihood is that by the time the revisions are done in about 4 to 5 weeks, we'll probably see that number closer to the low 100s.
And how are we doing?
Well, we're going to find out soon. The employment report comes out, I believe, in about 10 days, as does the inflation report is on the 15th. Both Canada and the U.S., coincidentally, on July 30th, make their Bank of Canada and the U.S. Treasury make their announcements. So,
same day.
Same day. So, interestingly enough, I mean, they're both leaning towards remaining pat right now. So the odds are that they're going to not do anything, only because of the job report in the U.S. There was a 50-50 chance the U.S. may cut finally, because that's, of course, Donald Trump is pushing hard for them to start cutting rates, but
just a little.
But the job report that came out yesterday, unfortunately, is probably going to put a quash on that real quickly. And as far as Canada's concerned, it's all about the core inflation, in my opinion. Whatever the core inflation comes in on July 15th will determine whether Tiff Macklem's ready for another rate cut or potentially just going to remain on the sidelines again.
And why does corn matter so much?
Corn?
Cornflation.
Cornflation.
Oh, Stephen.
Correct.
So we have those two before our announcement.
We have both. We've got the unemployment, we got the GDP. We have 3 reports coming out before our announcement, but really, I honestly think it's the inflation report that they're most focused on, only because that's the number that they need to make sure that they stay. Again, he doesn't want to make the same mistake he made in 2022, which is waiting for inflation to run away and then have to be really aggressive. So I think this time they're being very cautious, and they're going to make sure that the core inflation is in place. And once it's in that ballpark that they want it to be, then they'll resume cutting rates.
What's going on with the bond market with this big, beautiful bill?
A roller coaster, but
Really?
it's a baby roller coaster. I would say over the last 3 months, anywhere between 15 to 20 basis points, one way or the other, from 1 week or 2 weeks to another. So luckily, we've stayed anywhere between the 2.7 to 2.9 when it comes to the bond market itself on a 5-year bond here in Canada. U.S., very similar. U.S. uses the 10-year bond to do their that's where their interest rates are set from. So the U.S. is no different. They're in that same ballpark. If you look at it over the last 2 months, there's a 15, 20-point spread up or down, depending on the week and depending on what Donald Trump says. So
what happens to our fixed rates then?
our fixed rates have remained fairly stable. I mean, we got down into the 3s when the bond market hit to 2.7, and unfortunately now it's been closer to 2.9 for the last number of weeks. So that's why we're seeing interest rates. You can still get a renewal through a bank, through a non-bank lender, sometimes in the high 3s. So we're seeing still the high 3s. But ideally, if Bank of Canada can, if core inflation can come back down to that 2%, and we get maybe another 0.5% cut in prime, ideally it'd be nice to see as so many mortgage maturities. So now we're starting to have the conversations with clients that have their mortgages maturing in September, October, November, December that are in the 1s. So now they're having to go from 189. I had a couple of them yesterday that were 189 and 194. All of a sudden they're having to look at 4% for their new renewal, and that's a hit on them. Luckily for them, they're in a great position because real estate went up tremendously in value in that 5-year period, and they've got more equity built up than they ever expected. So therefore, they've got options to be able to increase the amortization and keep the payments similar.
What happens
Still going up though, and going up healthy, right?
Of course. Well, still, but not as, again, not what we saw in 21 and 22.
Yeah, but what happens to the people that bought?
That's where the problem is.
That's next year though, right?
That's a problem for next fall, next winter. That's where we're going to feel that pain is at that point.
And even if rates do come down, I still think we're going to feel that pain, right? Because these people bought higher than where we are right now. So I think we're going to feel that pain regardless of what happens with
They just won't have the equity to tap into.
They won't have
because somebody
any,
who bought with 5% down won't have the 30, 35, 40% down that people who bought 5 years ago with that same down payment fall into that category now.
Which is something we saw years ago with the condo market, when condos were actually underwater and people had to refinance their house, or they had to, renew their mortgage, and they're like, well, what do you mean my house is not worth what I paid for it? So that was a tough market.
And I guess it'll all come down to that cornflation.
Corn inflation for sure.
Cornflation. 521-TALK, 521-8255. We'll be right back.
Hey.
Welcome back. Paul here, Frank here, Sean here. How's life in private
Greg's
mortgages these days?
Well, as
Greg's
you can
here.
tell, everyone's here. But as you can tell from the conversation, it's an active and busy market for ourselves. And listening to Paul speak about the markets, that's really what we're seeing from when we're having conversations with, especially mortgage brokers, looking for that short-term solutions for their clients. And I'll ask you this, Paul: how many are you seeing individuals purchasing homes and they haven't sold their homes yet?
Yes. No, I mean,
maybe not quite to the extent we did in, COVID era and whatnot, obviously. But,
but we're still seeing people. I mean, there's lots of people who are buying houses and not selling their houses yet. Mm-hmm. Obviously not with my team, but with other teams for sure, that they're just not selling yet. Yeah. Well, it's true. One, because my guarantee will get them out of a jam.
While we're talking about this, should you buy first or sell first these days?
It's hard to. It's really hard to tell. It depends on what area you're in, what you're buying. You're upselling, you're down. It all depends what you're buying. But most people, it's hard because things are selling. But when you buy, I think that more people are actually buying before they're selling now. They have more confidence once they find something that their house will sell than in the past where they were a little bit nervous the house would sell. And now, when we were going through COVID, people were like, I'm really nervous about my house selling. I'm like, I'm more nervous about finding you something because it's going to be hard to find you something. You need to 100% buy first. And it shifted a little bit where the market changed a little bit. Now it's kind of 50-50, but I'd say there's probably more people buying than selling than there is selling than buying.
And if they are in a bind, are there solutions?
Yeah, and that's where we come in, right? So we have those abilities to certainly, as you said, the confidence is shifting for folks that that wasn't quite there in the spring market, that sort of just was moved along, and now hopefully it's moving into here. But it's certainly options for us. If people haven't sold their home, we have the ability to provide basically their financing for that purchase, and we do what's called a blanket mortgage. So we blanket their mortgage or their other property that they haven't sold. It's not a bridge finance, which a lot of people sort of use those terms back and forth the same, but they're not a bridge finance. You have to actually have your home sold, and you're bridging that gap just usually in the dates. Whereas a blanket mortgage, that's where we're basically putting a second mortgage on someone's home, and then when they do in fact, sell their house, then we pay off the mortgage and we pay off that. And then they usually, Frank and his team or brokers out there, they would provide, a traditional lender, if you will, for that. So that's a creative solution and an idea that we're seeing be able to provide on our side. And then really to follow up sort of as we move into, a busy time in September, October, November with those maturities and those renewals. While some people have probably accumulated some debt in the short term or in their last 4 years of their mortgage, so they're coming to us, and we've seen a couple of those files from Frank's team this week where we're doing second mortgages because we don't want to break their first mortgage, just maybe, collectively putting some debt together, paying that off, which lowers their overall ratios. And then at their maturity, come September, October, November, whenever it may be, then we're going to pay off both mortgages and package it up, and it works out as a benefit for the borrower.
Sean, that's actually helpful now that I'm thinking about it, because obviously I have a guaranteed sale program where if you need my guarantee, I can guarantee the sale of your home, but it doesn't work for everybody.
No.
It doesn't. The finances doesn't work for everybody. Maybe the condition of the home or the location doesn't work for me, so I wouldn't do that. But having this blanket mortgage, which is much different than we talked about than a bridge loan, because bridge has to be sold, but having a blanket mortgage out there will be beneficial because there are people who are taking that risk and they're buying that new home and closing, at a certain time, and their house is not selling. Well, if your house is not selling, having that blanket loan, it's going to be costly. I get it. Yeah. But at the same time, it gets you out of a bind. What's more costly? Losing your house or,
exactly.
or getting
plus if you got the equity in your house, it's worth paying for.
And that's typically where we've seen a big, obviously a run up in real estate and whatnot in the last few years too. So people do have the equity in order to basically, if you do the math, we're probably at times giving someone 100% financing on their purchase with blanketing the other mortgage as well.
Wow.
Right? So don't quote me that it's 100% financing, because it truly is not, because you're taking the values of both properties and whatnot, which lowers the loan to
value. But it's open-ended until you don't need it anymore.
And it is open, exactly. And there's short-term solutions. That's the benefit, really, that people, when they're using a mortgage broker, that when you go outside from a bank representative or a bank, individual, that they don't have those options to do. So people, I think are becoming more and more aware of those, and you're just able to provide, a solution as a mortgage broker that others can't.
Well, the beauty of that too is we run into some situations where the people are like, listen, just fire sale my house. And this is a good solution not to have to fire sale your house.
And
right?
you don't lose everything, right?
You don't lose everything, because we're seeing people, and it's not always with us, but we're seeing people their house has gone from 1.1 to 850 overnight. We're
just
like,
bring us an offer, right? Just bring us an offer.
Just bring us an offer, and I just need to get out of this house. And think of all the equity and money they're losing. And yes, this is a costly financing option, but it's probably a lot cheaper than losing.
And you know what, Paul? It's really not as costly as one may think, because it's a solution, right? We're doing, we would do typically those types of files 3 month terms. You're doing them, call it at $599, so
which is not bad,
and it's interest only, right? So when people start looking at that from that perspective,
there's a lender fee, and that's the one, right?
Yeah.
You need to talk about the lender fee, which is a certain percentage of how much you're borrowing, and I think that could range anywhere between 2 and 3% of the amount you're borrowing. So, but lots of scenarios where, it's like you said, Paul, if somebody hasn't sold their home, why fire sale it? Take this as a solution. But for us, like, we're trying to reach most of our renewals 6 months ahead of time just to prepare them for the renewal. And we've had a couple of scenarios where they've got CRA debt. And if you've got CRA debt and you want to add it to your mortgage at maturity, good luck with a bank. If it's past CRA debt, they're not adding it to your mortgage. So
Why is that?
Because they just don't deal with CRA debt. They do not want to pay off CRA debt. They'll pay off other debt, but they will not pay off CRA debt. So that's a hard fast. Because
But it's not an equity thing.
No.
But as far as the bank is concerned, it might be habitual that you get behind with CRA, and everybody needs to understand that CRA can take a first position over any lender when it comes. So therefore, if there's CRA debt in the future, and again, the banks will look at that as maybe this is habitual, so therefore we're not going to pay off CRA debt. So
There's a hierarchy of debt. CRA is
CRA
right
number
at the
one.
top.
Yeah.
Right, number one.
Your mortgage
Every
is
time.
right next, and
Well,
then
no,
the rest.
I was going to say your property taxes are next as
Yeah,
well. So
yeah.
as a lender, those are things that we look at, and those are solutions that we're able to provide. We see that constantly where, self-employed individuals, majority of our borrowers are self-employed. They have CRA taxes to pay, and we're able to just, again, do a second mortgage, pay it off, and then in a month or two from now, they're able to, do their new refinance with a traditional lender.
You get people knocking on your door thinking there's no hope for them.
No, you know what? And that's really the shift in private lending. And our investors realize that. They realize that time has changed from 10, 15 years ago, that we're truly providing solutions, alternative solutions in the short term for people to just fix up whatever it is and then they move on.
But do they come to you and say, boy, I at the end of my wit here, I can't.
Not really.
No?
Because that's a conversation. Well, we don't bring on borrowers like that.
Right.
And that's really a discussion that we have collectively as a team when we get applications. It's unfortunate that we do see those applications. We pass on them, but that's also a conversation that we have with the brokers, that they need to maybe go back to their borrowers and say, you might have to sell your house. That's probably your only solution that you have.
The only thing we do on this show, Steve, is we come up with solutions for people. That's what we do. We are solution based.
We change the name of the show, maybe?
Yes.
The Solution Show?
Well, I think that's something that we pride ourselves on. Like, readers coming on here bringing us another solution that's helping people in a problem that we're having right now. I came up with that guarantee that's allowing people to get out of their properties as well.
There's usually a way out.
There's
right?
there's a way out, but it's you got to be creative, and a lot of people don't know this, right?
Mm-hmm.
It's like we're talking with Frank with rates. A lot of people will sign the bank. Oh, the bank sent me this. Oh, it's at 7%. Perfect. I'll sign it. People just don't know. They don't know. So,
Well, if they listen to the Solution
then they
Show,
would be
they
educated with
know.
our solutions. Yes.
521-TALK, 521-8255. We'll be right back. I'm back. Thinking about fixed rates, should we be locking in? Are we into that area now where we're unsure what's going to happen in the next 3 or 4 months?
50-50. It's whatever you feel most comfortable with. If you're comfortable locking in the high 3s, low 4s for 5 years.
No, but if you're looking at fixed anyway, should you get a lock-in guarantee?
Well, you could for 120 days.
It doesn't hurt ever.
Yeah, it doesn't hurt. I mean, the chances are probably higher that within 120 days, fixed rate should be lower. But who knows? I mean, today the markets move on one person's verbiage that morning, whatever mood he feels like that morning, and the markets will move, and therefore will impact bond markets tremendously. But there's too many customers out there that just take whatever their bank says as being the gospel, and they're so far off. Get that second opinion, get that third opinion. It's okay. I mean, the bank people, keep in mind, I was there. So 22 years myself at a bank. I was taught to say what was in the best interest of the bank, but make it sound like it's in the client's best interest. But it was really in the bank's best interest. So, I had a circumstance this week. A friend of mine called me and, she separated from her husband. She knows I'm friends with her husband, and it was very uncomfortable for her to call me because they finally went to mediation, and, she's going to keep the house and she's going to buy him out, and she felt odd. And I said, well, here's what should be happening. And the bank turned her down, and I start working on it. And then, the bank calls her back and says, so, like, you want us to put a second mortgage, to see if we can get you, we'll refer you to another mortgage broker. So they weren't going to do it. And she goes, no, I've got a mortgage broker looking after me that's going to do both together. An hour later, she gets a call back from the bank saying, "Oh, we got it all done already. We put them both together." Again, there's a situation where the bank was hoping to take advantage of this individual, and this individual instead went back and said, "Now I'm going to take it all away from you," and all of a sudden they came through. Now, the reason that I suggested she stay is because she's got a year left on her mortgage, and this prevents her from having to pay the penalty. So again, the advice is based on what's best for her, despite the fact that I think she should be penalizing the bank and moving the mortgage away, which she will do in a year when there's no penalty. So,
Frank, you'll be shocked. You'll be shocked. Part of my job is actually asking, have you talked to a mortgage broker? Like, do you know what your rate's going to be? Do you know what and a lot of times they'll be like, yeah. We talked to the bank and we got a great rate. We got this. And I'm like, that's a terrible rate. Probably 80% of the time, that's exactly the conversation that happens, that it's just they get a terrible rate. That's just the first rate.
You know what they fall back on? The banks? Well, our posted rate is 7.25%. We're going to get you a discount of 2.5%.
Yeah.
So that's how much we treasure your business.
Yeah.
We're going to give you 2.5%. So we're going to give you 4.75%, where our posted rate is 7.25%. But the market out there is at 409 or 419.
Yeah.
That's the difference.
And so we're not slogging the banks. We're just saying.
Yeah, don't even get me started on posted rates.
But we're not slogging the banks. But we're just saying, like, you need to do your homework.
Yeah.
Do your homework and find out your best options. Because listen, if you don't know when you're kind of a newbie in the area, and we deal with a lot of newbies, and they tell us the rate, and I'm just like, no, that's not a good rate. Like
I bet you they're 1 or 2 points above.
Well, not usually 2, but like, let's say the best rate on the market is 409. It could be somewhere like 479, and I'm like 479. Now, of course, I don't know their scenario and their debt level and all that stuff, but a lot of times I'll ask those questions: what they do for a living, how much debt are you carrying, this and that, and they still offered you that rate. No. You got to shop your rate. That's I want to be loyal to my bank. I'm like, oh, really?
It shouldn't be like buying a car, right? You should get the best rate right out of the gate.
Not a chance, because it's very profitable for the banks not to do that, because they realize that there's a good percentage of people that will trust their opinion, trust their advice, and go ahead and sign, and therefore it's a big profit margin for the bank. Just like the posted rate is all about profits. Let's not call it anything but. It's all about taking advantage of consumers at a time when they need the bank the most. The bank puts their back up against them, and basically what happens is, you're going through a separation. You've lost your job. You've got a health scare. So now all of a sudden you need to make some changes, and the bank penalizes you tremendously for breaking that term, breaking that mortgage in a scenario where they shouldn't. They should be working with the client. And that's my point all the time, where, we deal with non-bank lenders, they have significantly better mortgage options available for clients, because they use a true penalty clause, which says that here's the rate you've got 2 years left on your mortgage. We're able to do this 2-year mortgage now at our rates on a new 2-year mortgage is 4%. You're at 4.25%. We're going to charge you that 0.25% difference for the 2 years, which is a fair.
But you know what? It's just, but it's almost how many people will drive from Orleans to Barhaven because gas is 4 cents a liter cheaper, but they won't pick up the phone and call another mortgage broker or to find out, what their rates are. It's the same with real estate. How many people they start the conversation with, how cheap are you and how cheap can you go with your commission?
Yeah. Is that the first question you get a lot of times?
Oh my God. What's your commission? How cheap can you go? And I'm like, whoa. I mean, I'm not a discount broker, so we're not having that cheap conversation, but people will do that. They just shop on the cheapness. But what I would do is just do the education.
Yeah, what does cheap cost you in the long run?
Well, it costs you thousands of dollars, right? You need to find out what people do for it. Even in mortgages, if someone's equal to each other, what do they do different? What does their mortgage look like? Same with real estate agents. What's their marketing plan? What's their metrics? What's their statistics? Why would you go with this company over that one? Do your homework. It's very important.
Are all private mortgages the same?
No, they're not. Not actually. Each one is individual. We look at each one as separate, and just listening to the two of you, we need to get away from that discussion on cost and rates, because we're a solution team here, right? Remember,
well, that's what we're doing, giving solutions. Yeah.
But that is one thing, a defined difference from a mortgage broker. They're able to provide those solutions, and then when you get back to the private lending, at the end of the day, every deal is different. Everyone's story is different, and very rarely for us, when we actually have a borrower that comes to us, pricing isn't really even a discussion. It is truly that solution that they're looking for. So they realize, yes, I'm in a different discussion than everybody else that's in a traditional A space, if you will, whether it's, a 409 or, 405 or whatever it may be. They're not even in that discussion. They need a solution. So rate and pricing truly doesn't become that much of a discussion.
What type of situations do you see?
Well, like we just said, we're trying to put people for the renewals to get into a better position, whether it's paying off some debt, and then in another couple of months, they're going to be able to package off those second mortgages, our second mortgage and their first mortgage, and refinance this out. That takes some time. We also see the odd time people need another year or two or another year of, say, income on paper. So they can't get traditional lending because they don't show enough income on paper.
So they don't have bad credit.
They don't have bad credit. I'm able to I can see through business bank statements, if they're self-employed, how much money they're actually making. And I can tell you, okay, yeah, you know what? On paper, you're going to have to bring your income up to this to qualify, in a year from now with another lender. But today, I know how much money you're actually bringing home in your jeans at the end of the day, and you're going to be able to pay my mortgage.
And I bet a good chunk too. I mean, 50% of the market right now is separation divorces.
Yeah.
I bet you there's a lot of that as well.
And with that, when we typically see, that doesn't put someone right off the bat into a private mortgage, but sometimes they're negotiating still they don't have a separation agreement. So now you get into traditional lenders that they're going to need a separation agreement. We can, be depending on the situation, the loan to value. Are there, payments that are going to be made for child support and spousal support and whatnot? We can look at each individual case and make a decision, and maybe we'll provide a 6 month or a year, whatever it is, for them to get their affairs in order.
So it's not normal to live with your ex-wife and 8 huskies for 17 years like Steve did? That's not normal?
It is if you don't mind suicide.
It's because Steve did do that. He lived with the ex-wife with the huskies if Sean was around back then. And listen, if you can get him approved for a mortgage, I think everyone should use your services.
Well, I'm young enough. I can get approved anywhere.
Good thing there's no age barrier, right, Frank?
There's 3 or 4 really good mix in our city, which again, I mean, I'm all of a sudden all these Toronto mix are appearing based out of Toronto, and they realize how good a MIC Mortgage Investment Corporation, where they're looking to lend out money, and and I can tell you some of they are cutthroat. I mean, you miss a payment, I think with our MIC, hey, we'll phone you, what's going on, like we'll work with you. These other MICs, they put it right in their contracts, like they will come after you and they will start legal proceedings very, very quickly. So again, I mean, we choose at Mortgage Brokers Ottawa, we choose to pick. And not only that, I mean, I promote every show. I've been doing it for the last 5 years, support local businesses and charities. And we've had a whole bunch of these MICs in Toronto trying to get into our space here in Ottawa. And as a brokerage, I mean, we say no to them because we have our local ones who are supporting local employees, people that feed their families here in this city. So why should we support ones from other cities that don't even understand our market? That's what bothers me the most, is they don't understand our market, and they treat our market like it's the same market at the GTA, where in the GTA, the risk level is significantly higher, and here the risk level isn't as high.
As investments go, you mean?
Both investments and on the lending out side, where our real estate is, extremely conservative. You don't see the big fluctuations that you see in the GTA.
Oh, Frank, we see realtors now from Toronto flooding our area. The problem is they don't know our market.
No,
I've seen people overpay for homes because their agent knew nothing about the area. I've also seen during COVID when prices were going insane and people were bidding, 100 and 200,000 over, and people are, Toronto agents were coming in at asking price. I'm like, do you think your buyer has a chance at asking price when someone else is 100 and 200 over? They didn't know the area. And then also I've seen people who have overpaid for their house because the Toronto agent said, oh, you need to go to this price to get this house. So it's in your industry, it's in my industry, it's in the MIC industry. Deal local.
Yeah.
Deal local.
Real estate has to be looked at local.
Has to be.
And going on Frank's, when we have MICs from Toronto, we don't as a MIC go into the Toronto market trying to think that we're experts by any means. We have very few files outside of Eastern Ontario and Ottawa specifically, just for that reason. Because I know when a broker calls how real estate, when they say they have a property in Manotick or in Greeley, I understand, I know that. You call a Mick from Toronto and they say, well, where the heck is Greeley?
Yeah.
They don't understand.
Where's Nepean?
Yeah.
Where's
Exactly.
Nepean?
Gloucester.
Gloucester. Where's Gloucester?
Yeah.
But our market is more solid too.
Well, it's stable,
Yeah.
right? And those are all the benefits why we're all in this industry here, and realize that the benefits of being in Ottawa real estate is that stability. And certainly, sure, do we get the high times that some of the other markets do? Probably not.
No.
But you know what? We're conservative in nature as individuals and as people in Ottawa, and we expect that. So we're okay with that.
And you can listen to a show that gives you solutions.
Solutions, yes.
Based.
521 Talk, 521-8255. We'll be right back. Welcome back. The numbers for June.
Yeah.
How are condos
Not May,
doing now?
June.
The condo market is still a struggle. Like, if you break the condo market down and you look at high-rise condominiums and you look at sort of low-rise terrace type of homes, the terrace type of homes are doing better, and I'll tell you why. One, there's less maintenance fees, and the maintenance fees is always a killer. There's some high-rise condominiums where, especially the newer ones, where condo fees could be anywhere from 50, 60, 70, 80 cents a square foot. So when you do the math on that, you know, when you're buying a $400,000, $500,000, $600,000 condo,
That's a lot of mortgage.
and then you're jacking on another $500, $600, $700, $800 a month in condo fees, it becomes very expensive. And there's some condos, higher end condos, that you could be buying a condo for $2, $3, $4 million. Now, people can afford these, but you know, you're buying a condo for $2, $3, $4 million, and then you have condo fees on top of that of $1,200, $1,300, $1,400 a month. Then you have property taxes. Then you have your bills. Sometimes it's smarter not to buy that condo. So I think a lot of people, there's an appetite for condos in a certain age bracket, whether it's young people getting into, you know, cheaper condos, or older people getting into their, like, you know, their final home and having these high-rise condominiums and beautiful locations. That's great. You have an appetite for that. Sometimes they're more expensive and sometimes they're not as attractive. And I think that our condo market has always been average here in Ottawa. We went through some periods where it was decent, and we went through some periods where it was amazing. But we also went through some really scary periods where people were promoting, you know, buy this condo when it closes in 2 years. It's going to be worth X. And then, well, what happens when that condo closed in 2 years? You had a lot of
They
investors.
all came up at the same time.
Well, you had a lot of investors who were selling off their units or renting their units. Okay, so now you've got 42 people renting a unit in a condo building. What happens to rental prices? They go down because there's no demand on and so much supply. And the same was happening with selling. A lot of people were speculating, buying these condos for, you know, $400,000, $500,000, $600,000, and then by the time they hit the market, there was 12, 13, 14, 20, 30 of them for sale. And what happens to prices then? They go down. So our condo market's always been a little bit finicky here in Ottawa. Toronto's going through a tough time right now with their condo market. I mean,
it's been a while too, huh?
They've been in trouble for a while. Keep in mind, there's more cranes in the sky per capita in Toronto than there is anywhere in the world. So there's tons of condo building going on, mainly because of affordability. So we're seeing a condo market in the Ontario area is a little bit tough. And when it comes to Ottawa, if you're buying high rise, a little bit tougher than if you're buying low rise.
How are they as an investment?
Well, they're like I'm mentioning right now, like they're an okay as an investment, depending on what you're buying, what your condo fees are going to be like. You know, you have to buy the right building, the right management team, you know, the right condos. You have to buy the right building. But, you know, I'm not going to say no, they're not a great investment, because there are some that are a great investment. I personally have never really held condos. That's a lie, actually. I held a couple low-rise condominiums as investments, but usually I like to hold things that don't have condo fees associated, mainly because that's a tough variable. A condo fee is a tough variable. You're actually, you know, you're relying on everybody in the building, not just your own unit. And I think that anytime you're, especially a new condo, when they say, oh, condo fees are going to be this, after 1 year, they might be this plus. So.
Are investors coming back into the market now?
A little bit. I mean, as the rates come down and sort of prices came down, we're seeing more investors coming into the market. The only thing that's dragging investors out of the market is the nightmare of tenants. Tenants are a nightmare right now, like we've talked about, and tenants have all the rights here in Ontario. So there's a lot of investors that are cashing.
You say
out.
rights, but it's beyond rights now.
It's way beyond rights. It's like, we're going to sell the unit, we're going to give you 2 months notice. Yeah, we're not moving out.
Yeah.
That it's happening
Because
all
they
over
know
the
it's
place.
going to take so much time and
It's happening all over the place. I'm dealing with tons that are doing this right now. I have one of my own investment properties that the tenant has said that, well, what are you going to pay me to leave? It's wrong. It's so wrong on every levels. And I'll probably get myself in trouble if I talk about it on the air because I
Yeah.
get so animated and angry at this because I know what it took for me to afford a building and for someone to move in and dictate what I'm able to do with that building makes me insanely mad. And there's too much going on in this city. So are investors coming back? Yes, they are, because they're able to afford things now and actually turn a cash flow positive. However, there's a lot of people that are scared of tenants right now. And so it's a 50-50 mix when it comes to investment properties right now.
now, as far as rates go, before we go, anything in the high threes?
On a renewal, you might be able to get in the high threes, but on a brand new mortgage, again, it depends on, when you go to a bank, it all depends on if they've had a whole bunch of customers that have accepted their much higher rates, then they've got a little bit of give where they can lower the rate for somebody that they really want to acquire the business from. But, expect low fours when it comes to a brand new mortgage, and it all depends on the circumstances. So,
And private mortgages, not crazy that you might think, right?
Condos, by the way, Sean, like mix are okay with condos.
With the
or it
condos,
depends,
yeah,
right?
well,
it all depends, right?
Yeah,
You do your homework for sure.
We do.
Yeah.
I would have to say we tend to stay away from the high-rise condos unless again there's a real short solution and a reason that we're coming. But if it's someone looking to hold and they need a solution, that's usually a deal that we pass on when it comes to the high-rise condos.
Birthdays?
Yeah, I got my brother-in-law, Joe, who celebrates his birthday tomorrow, and Alfio, the drywall king, and his beautiful wife, Carla, celebrating their anniversary this week. There you go. And our good friend, Mike Carchetto, his nephew, Liam, turns 22. So, he's an absolute avid listener of our show, and usually
What's
pipes
wrong
in.
with him?
I know. Usually pipes in and sends us articles all the time, and some really good articles, actually. So he's really on top of both the mortgage and real estate industry. So happy birthday to Mike's nephew, and this beautiful woman, my wife, celebrating her birthday. But I'll talk about her next week, and of course, Paul's beautiful woman. Paul's beautiful woman is celebrating her birthday, Petra. Happy birthday, Petra.
What a jerk, eh? What a jerk. Yeah, so...
Any birthdays, Paul?
Yeah,
Any at all?
thanks,
Just
Frank.
anything
Yeah.
off the top of your head?
I do have a few. Kathleen, my listing coordinator, celebrates her anniversary at the company today. Sarah, who's my closing coordinator, tomorrow is her anniversary at the company. Special birthday, who's doing the show for me next week, Dora, on Wednesday celebrates her 29th birthday. Wow. So happy birthday to Dora. She'll be doing the show next Saturday for me. And another one of my agents, Kevin Janica, who celebrates his the next day on Thursday. And I will not be on the show next week because I have a very special day celebrating my girlfriend Petra's 29th birthday.
Wow, you both know a Petra.
Boy,
Yeah, thanks. But it's Petra's birthday. It's on the Sunday, but we're going to be celebrating on the Saturday, so I won't be on the show because we're having a big surprise. So
You're
happy
going to be
birthday,
celebrating
Petra.
the Saturday, the Sunday, the Monday, the Tuesday.
We're already celebrating. It's a birthday month with her right now, so happy birthday, Petra.
my beautiful wife's birthday on Sunday as well, but I'll be doing the show anyway.
Oh,
wow.
That just goes to show you my lady's more important,
No,
right?
not at all. Not at all.
Okay,
Sunday.
the argument will continue off the air.
Yeah, please continue.
great week.
I do have one more story. Our good friends of ours, Jennifer Fraser and Mike Thompson, get married today in Brockville. So have a wonderful
That's awesome.
marriage, and we're heading there right now. So
They'll be calling Sean soon.
Calling Sean and
not
I
too
for
soon.
advice, obviously, on staying married. But
Have a great
anyway,
week, everybody.
Yeah, continue to support local businesses and charities, everyone.